Hey all, welcome to ShareTreck. This is Raj here. Good morning, Inf. Thanks for joining. I hope you have some time today, or are you rushing back to the uni? Okay, here we go. Let's get started for the day. And yeah, let's go. What do we have here? Thank you, Inf. So what we have is the futures are mildly positive, but there's a lot of things happening underneath. Let us start off with the economic calendar. We are expecting a whole lot of data today. So based on the current economic context and data scheduled for release today, this is how I'm thinking that I'll interpret these indicators. The US economy is experiencing a challenging period characterized by policy-driven stagflation, I would say. Real GDP shrank by 0.3% in Q1 2025, while inflation, that is PCE, jumped to 3.6%. Consumer confidence has fallen to a 12-year low, and consumer sentiment is at its lowest level in 44 years. This backdrop of economic uncertainty, combined with ongoing trade tensions and tariff policies, creates a volatile market environment, in my opinion. Today, we are going to get wholesale inventories at 10 a.m. It's expected at almost 0% versus the previous 0.4%. The market impact, I think, is a reading at or near expectations. Flat growth would suggest businesses are managing inventory levels cautiously amid economic uncertainty. This could be interpreted positively as companies avoiding overstocking in a slowing economy, potentially supporting margin. However, persistently lower inventory builds that might suggest a weak signaling a weak demand expectation, which could weigh on cyclical stocks. But if you find too much of inventory out there, it could be the front loading because of the tariffs. And consumer inflation expectations are coming at around 11 a.m. It's expected at 3.6%, unchanged from previous. This is the most critical release given current market dynamics. Inflation concerns are again looming over markets, with bond yields surging and stocks struggling. If expectations remain at 3.6% or rise higher, it reinforces the Federal Reserve's cautious stance on rate cuts. Elevated inflation expectations reduce likelihood of rate cuts, keeping borrowing costs high and pressuring interest-sensitive stocks like real estate and utilities. So those are the things that I want to mention. I think that technology and growth stocks are vulnerable to higher rates if inflation expectations rise, and financial sectors could benefit from that. And consumer discretionary is at risk if inflation expectation rise. Given already weak consumer sentiment, energy and materials may benefit from inflation hedging demands. That's what I would think. And looking at the S&P 500 futures, it seems that the market is also weighing all of these things. We have MACD almost bearish to neutral. Momentum is at very close to overbought but flat. Sentiment overall is bullish. So we have to see what happens. I know when I look at the news, like National Guard deployed to California, I would expect that it shows a lot of freeing in the US economy overall and US political and structural setup. It should weigh in on the dollar index, which is down 0.17% today. In the past, we have been way below this, even without deploying National Guards to California. The environment internally is getting vitiated, and dollar value, in my opinion, depends on the stability of the US government system. And it's likely to take a hit today. The sentiment has been bullish for a while. So these things always confuse me. I wonder why the market is not taking cognizance. So US dollar 10-year yield, USD bonds 10-year yield is at 4.50. It's touched at 4.5 now, and 20-year has touched 5, and 30-year is a stacking distance of touching 5%. So these are all indications that the overall global community is looking at US and looking at the problems that is happening internally and having a double take. NASDAQ also is exhibiting the same thing, just a 9 to 10%, 0.9 to 0.10% gain in the pre-market session. It's just a narrow band out here, waiting for the market open to happen. Of course, overall, both of these indices are showing really bullish trends, which could take them very high. But we got to wait and see what happens, because when you look at the actual fundamental situation, the global economy is having a great deal of problem. China has seen a drop in its shipping to US. So that kind of indicates a lot of deflation within China. And it says here, China's exports to US clocked their sharpest drop in more than 5 years. So that'll be deflation in China. At the same time, the export to US is not there. Where else is US going to get those things from? That is going to sow the seeds of inflation in the US. And all of that has to reflect in the stock market. And that's the reason why I'm worried about where we are going with this, because margins will be strained and demand will start to go down. So, yeah. So that's the problem I'm thinking we are facing. And that's why I'm afraid to be fully bullish, even though the chart says bullish. I think the conventional wisdom is follow the chart. Everything in the news is priced into the chart. But in this case, I'm a little bit afraid. We have this place called CN Tower in Canada. And I'm going to do a segue to just give you an illustration of how I'm feeling. On the top of CN Tower, which is the tallest structure in Canada, when we go to the top of CN Tower, there's a glass floor. So you get to walk on the glass floor, which is totally transparent. So you feel like you're walking in the air. And it gives you a kind of fright. I've always been afraid to walk on that glass, even though I know the glass is very strong. It can take my weight and weight of 20 more people like me. But I'm always afraid to get on top. I have seen people crawling on top of that glass, crawling on their bellies, because they want to get that experience, but at the same time, they're afraid that they would fall. So there are people with different levels of fear. And I am skittish like that when it comes to this stock market today. And that's what is making me worry and not be able to make any moves. So honestly, I'm not going to make any moves today with the stock market, because the technicals are very bullish and the fundamentals are very bearish. There seems to be a divergence between the two. And even if you look at NASDAQ, right? Now, if I take this line here, and then I take this line here on the momentum, and maybe I just clone this and put it out here. Okay, it won't come into this chart. Let me just delete this and draw a new line out here. As you can see, there is a divergence out here. I would say it's a bearish divergence. It has to come into effect sooner rather than later. You can see the same divergence out here as well, right? So all this is giving me a little bit of a pause. And guys who are watching, if you feel that this is not something to worry about, this is a daily calendar, mind you, it's not a minute calendar or 5-minute calendar or something like that. Each of these calendars are 1-day calendar, 1-day candles. And I think there is bearish divergence. We are just waiting for the shoes to drop. That is my feeling. Now, I want to go in and have a look at some of the charts out here. Let us look at NVDA for that matter. NVDA, I think, is gently diversifying. They are trying to hedge their bets outside the US without announcing it. Now, what do I base that on? Look at this headline here. NVIDIA CEO says UK is in a Goldilocks moment. I'm going to invest here. And he's saying that to do AI training and machine learning, you need machines. What is the best place where machines are being made? He says you can't do machine learning without a machine. And so the ability to build these AI supercomputers here in the UK will naturally attract more startups. I think it's just an incredible place to invest. I'm going to invest here. Wong also stressed that Britain has one of the richest AI communities anywhere on the planet, along with amazing startups such as DeepMind, Wave, Synthesia, and Levin Labs. The ecosystem is really perfect for takeoff. It's just missing one thing, he said, referring to a lack of homegrown sovereign UK AI infrastructure. Earlier on Monday, NVDA announced the new UK Sovereign AI Industry Forum, as well as commitments from cloud vendors, etc., etc. So what is happening is that looking at all the tariff walls being built in the US, I am expecting that most of these huge Mag 7 companies are going to start having a footprint in UK. UK is well preferred because it's out of the EU zone. European Union has got very drastic measures, regulations. UK would be game to be light with the regulations, and the advantage it gives to UK is that UK can ride the AI bandwagon and go ahead of EU and US, and European Union will be forced to reduce its restrictions and regulations in order to catch up. And that's the play NVIDIA is doing. And I think Google, Meta, everybody's going to catch up with that. And UK will find new relevance in the global environment with this move. So that's what I'm thinking when it comes to UK. And the UK government is also making some moves. Elsewhere, I think on Reuters, I had seen an article which says UK government allows banks to play with AI. That was the heading I saw in Reuters. Here it is. UK finance watchdog teams up with NVIDIA to let banks experiment with AI. So this is going to give an opportunity to banks in the AI segment to look at, how they can benefit. Inf is asking, Raj, did you close out your Tesla shorts? No, I did not. Because I knew that the mess that Elon and Trump have got into, it's not going to get resolved so easily. So I'm still on it, and I'm a dollar cost average into it if I find that the situation gets bad. But I think Elon has done a very positive thing today by not coming up with any more tweets and also deleting the inflammatory tweets that he had made about Trump, and that's good for the Tesla stock. However, Tesla is still in the negative this morning, so I'm going to watch it carefully. See, all the rats are deserting the ship. Argus Research downgrades Tesla to hold from buy. Okay, I don't think there is anything fundamental to this that didn't exist before. Before Trump was, Elon was in close proximity to Trump, and all these analyst companies had found ways to justify a higher stock price for Tesla. And now it says the opposite, mainly because of this spat between Trump and Elon Musk. There's buyers saying Tesla price cut maintained with a $320 per share by Bayard. Tesla cut to neutral from outperform. And Tesla shares down pre-bell after Trump says no desire to reconcile with Musk. All these negative headlines are still having a overhang. And remember, there is this huge Tesla facility in China, and China and US are not getting along very well. There is a meeting going on there's a meeting that's going to take place in London now. So suddenly London has become the focal point for everything. So hats off to UK for becoming relevant again in the global environment after the Brexit. There is talks going on in UK to resolve all these issues that are taking place between US and China, things that could not be resolved before. So they're holding a talk out there on contentious issues that needs to be sorted out. So I'm thinking that Z is not going to budge easily. He's not going to allow, like if US was dealing with some other country, you can say that that country is going to be smart to allow Trump to have some win arguments to put in the press and go out as, the winner. Z cannot afford to do that. So we'll have to see how they thread this needle, right? And you have Scott Bessent. He's caught between a rock and a hard place. And Howard Lutnick, he's a very slippy character, slimy character. He can say anything. Scott Bessent still has a modicum of respectability out there, and his word still has got some value. He's very careful how he characterizes things. So both of these guys have got to convince the Chinese that anything that they talk and agree here is going to be upheld by Trump, and there's going to be no surprises. There is no way Z is going to talk to Trump unless the vice premier signs off everything with Trump, and then Z comes to talk with Trump. That's the way it's going to be, and that's what I am thinking is going to happen. So getting something out of this meeting is going to be very difficult, because Trump has a track record where he has humiliated head of states in the White House during press conferences, ambushed them literally. And also he has already torn up all the existing agreement that he himself created, which US presidents have signed in the past. So as far as international leaders are concerned, they all know that an agreement signed with Trump is not worth the paper, because 6 months down the line or 1 year down the line, it will go away. And also if a different president comes in, it could all go away, because anything presidential can be undone by the next president. And the House is in a state of dysfunction where putting a stamp of approval for all of these things is going to be next to impossible. So I don't know how this is going to go. We are in a state of paralysis until midterms. If in the midterms, the GOP loses House and Senate, then it's a lame duck presidency, and nothing is going to happen for the next 2 years. In that context, if I look at the US dollar, the dollar index, I am thinking it's still very high. The dollar index has got to go down. You look at the dollar index, it's still pretty high. It has got to go down. That's my worldview, and I think I would like you guys to comment on it, and we'll see what happens out there. Inf is saying market might just dip and buy on every dip. Yeah, I'm very careful with the dips also. I'm waiting a long term before buying a dip. I've got Google, I've got NVDA a little bit left out after taking profits. I've got Berkshire. I'm waiting for the dips. I'm waiting for severe dips before buying. I want $1 or $2 dip in Berkshire before I buy the next 100. That's the way I'm looking at it. If you look at the VIX is up 4.11% today, which indicates there's going to be weakness in the market. If you look at QQQ is also, mildly up, but I think when the market opens, we'll see what exactly happens, because you have the bearish divergence in the futures. That indicates to me that the futures are not looking that great. I mean, the futures might give up. If you look at IWM is up 0.85% in pre-market, and we had this bullish target out here. Again, I come to the same thing. There's a conflict between what the technical is showing and what I think the fundamentals are telling me. So we should go with the chart, expect bullishness until there is no bullishness. And that's the way I would characterize it. Gold is gaining on the weakness of US dollar. It's gone past our minor line of resistance. So our minor line of resistance, which was at 3,429, has turned into a support, and we are moving upwards today. The context is still bearish, but we are going up because of the dollar weakness. That said, let's start honestly looking at all our AI stocks. NVDA, I think, is going to do much better with the diversification. I think I would be happy to buy a little more NVIDIA stocks on the Canadian side. Remember, I have already moved my profits on the US side into Canadian side. I've taken the money from US dollars and converted into Canadian and put it into the Canadian side. So any investment in NVIDIA, Meta, Google I am doing in future is going to be hedged Canadian CDRs, so that I have the protection against the falling of the US dollar. And I still have my fingers on these really solid companies. That's the way I'm playing it for the future. NVIDIA sentiment is absolutely bullish, but it's moving down a little bit and it's overbought. We have a bearish divergence that I can see out here for NVIDIA. Meta is also mildly up. It's also at a very high level. And even though the charts are looking bullish, if I look at the MACD and the momentum and then look at the charts, I can see bearish divergence out there, which needs to be heeded to. Google, again, is one of the best stocks, I think, in the Max 7, which is trying to regain its value. It's up 0.45%. If any of the stocks fall the least today, it's going to be Google. And Google is making measured movements and it's firmly moving up slowly and steadily. I've already sold most of my Google stocks and booked profit. I have very less available. So I'm going to be looking at dollar cost averaging at weakness. Then you have Amazon. Amazon is up 0.59%. Amazon is doing something really good, which I think is going to support the pricing as compared to the other Mag 5. Amazon is deploying future technology into the market. Amazon is going for AI-powered humanoid robot. They want to experiment on that. So let me see if I can find the news article that talks about Amazon trying to use US in the US the AI and robotics, AI-powered robotics. I don't see the news article out here. Let us see whether we can see anything out here. I don't see the article out here yet, but I would say that Amazon is pretty strong. Amazon is putting into the market the robot. Let me Google this. So this is what I'm talking about. Amazon prepares to test humanoid robots for delivering packages, the last mile. So this is what we are looking at. There was an article, I think, either in Reuters or CIBC. Actually, Amazon is selling small humanoid robots also. This is what came up in the search. Okay, let's get back to what we were talking about. Amazon is experimenting on those deliveries. And friends, what all of this means is that we are going to lose a lot of jobs, not only in the blue collar area in the factories, but also service sector jobs like delivery of parcels and goods. And even the Rivian vehicle out there might end up being, auto piloted with no driver in it. So all of those things are going to happen. So that's great. And also, if you look at the headlines out here, there was some headline about Waymo, if I'm not mistaken, that caught my interest. I think with Waymo, Google has done really well. It's already started making money. And one of the commentators this week has become bold enough to talk about Tesla, where he was saying that these companies which have been masquerading as AI companies and robotics companies will really have to deliver right now. And I would say that Tesla fits the bill. We may talk about Optimus robots, we may talk about robotaxi, but when it comes to that, I think in robotics, Amazon has delivered more. And when it comes to robotaxis, I think Waymo has delivered more than Tesla. And when it comes to AI, I think apart from Grok, we don't have anything else from Elon Musk. And I don't know if Grok belongs to Tesla, but Tesla has got to still prove its chops when it comes to AI and robotics by actually delivering something that makes money. The full self-driving is still not full self-driving. So there you go. That's my thought process. If anyone wants to comment on that, I would like to hear from you guys because I think Google is way better from that perspective, and it's still fairly priced. So my bets are more on Google, and there's plenty of gain to be made, plenty of room on the RSI. And as you can see, Tesla is starting to fall. This jump we saw was post-election because Elon was simpatico with Trump. He had put $365 million or something like that to get GOP elected, and he was around on campaigns with Trump. That's a conventional wisdom that CEOs should not get involved in politics. We're going to test that wisdom. Elon Musk is a maverick. He's doing things that no CEO has ever done before. And he's also in the forefront of taking companies out of Delaware into Texas. I think regulations are not a bad thing, especially for USA, which is leading the world in the capital markets. The money comes into the US because of the trust in the governance systems, in the legal systems, in the judicial systems, in the regulatory environment, everything. That's why you have the FDA, which is the gold standard in certifying therapies and medicines. That's why you got SEC, which is a gold standard. And then you have the Delaware courts, which are the gold standard. Now, everywhere else in the globe, they replicate these things and they follow these things. If you start breaking up these institutions and reducing their prestige and reducing their power and reliability, then we are asking for trouble for the capital markets in US in general, for the US dollar in general, and the US bonds. And that's what we are seeing in the bonds. The 10-year bonds are, the yields are going up. And then you got the 20-year at 5%, 30-year almost close to 5%. These are very high rates. It's going to cost a lot of money to fund US government going forward. On top of that, they are looking for trillions of dollars of deficit with the budget with tax cuts. Tax cuts will have to be earned by increasing the productivity, increasing the GDP per capita. We are not there yet. So all of that has got to show. We have the bearish divergence. I would say when you look at the what is happening out here and what's happening out here, so it's bearish divergence. It is going to happen sooner rather than later. Let's look at Apple, which has got a big China footprint and it's got some troubles. Of course, it's diversified into India, and India has got to learn how to make iPhones. They already delivered a lot of iPhones. The culture of making those kind of electronics and other things, manufacturing, has to get into India. India, of course, is democratic. It's a very different environment in which Apple is going to operate. China was a different environment. In China, if the ruling party or the government wants you to succeed, you will have no roadblocks. I think you will succeed, and the workforce is there. Everything is there. With India, you got the ability to do stuff, but there is a lot of union activity in the manufacturing sector, and there is a lot of red tape. I think India still has a long way to go with regard to speed at which judiciary operates. So the operating environment is different. The Prime Minister is very much focused on Make in India. So from the Prime Minister's office, there's going to be a whole lot of support. But navigating the Indian red tape, the bureaucracy, requires a special skill. So I wish Apple the best, and I hope they change India like they changed China and bring the ethos of high-class manufacturing and market sensitivity. Next, we go to Microsoft. Microsoft is down 0.21. I am anxiously waiting for Microsoft to come down. I bought Microsoft shorts somewhere when Microsoft was at 439. It's deep red right now. So I'm expecting for it to turn around. We already passed the all-time high, and it's high time Microsoft started coming down, especially given all the background noise that we are seeing. And of course, I bought Tesla shorts. I've added a few more shorts before Friday. I've kept all of them, and pre-market we are down 1.62. I'm expecting this to come down further because many of these rat agencies which were upgrading Tesla because he was close to Elon Musk was close to Trump, they are now starting to come up with lukewarm sentiments, and then they're going to go negative if the rift between Musk and Trump doesn't get resolved. So watch out for that. You can see sentiment is also getting bearish. What has changed other than the spat? Nothing. When there was no SPAT, people are saying, oh, this is going to be the biggest company and the real value is in robotics and AI and all those kind of sound bites. But the same people are now starting to give negative. We have more news out here. And let us see. Morningstar's Goldstein. Where does it go? When I click that, it goes away. When I click the news item, it goes away. It says here, Morningstar Seth Goldstein set Tesla's fair value at $250 with shares at $295. Ongoing tension between Musk and Trump may increase stock volatility and affect regulations. That is a video of Donald Trump. It's an AI video. It's a fake news video. I'm not going to show that on the channel. I've seen it on WhatsApp. It has got Donald Trump saying that, Tesla is a failure kind of a company and he's going to sell his Tesla for $65 because that's what it is actually worth. And the batteries burn and things like that. It's not a great company. And Elon Musk is going to come back begging to me, etc., etc. So I have that video on WhatsApp, which I have seen. So those things are also happening in the social media. If any of you guys have seen those kind of videos, just mention that in the chat section so that I can understand how widespread it is. So Tesla is going down, at least in the near term. Oracle is doing well. Oracle is a database company, and very silently they're getting into the action. When Trump had gone to the Middle East, Oracle got its finger in the Middle East Stargate pie. So they are providing a lot of infrastructure pieces and creating infrastructure for AI. So they are making money very silently. This is the way the companies should be run. Non-political, very low profile, doing their job heads down, making money where it counts, not attracting political energy like a lightning rod. AMD is doing very well. AMD has got a lot of upgrades happening, friends. AMD might probably catch up a little bit out here because when it comes to AMD, Citigroup has raised price target for AMD from $100 to $120. Meanwhile, Cantor Fitzgerald has raised it from $120 to $140. So that's the upgrade that is happening. And I'm absolutely sure that more companies will come now and talk about upgrading. And you can already see NVIDIA going off to UK. I would expect news from AMD as well and Intel about going into UK and doing something in UK. I'm expecting UK to start picking up the AI leadership, and that would prompt Trump to make some move against UK. This is my prediction. Let us see how it goes, and let us hope Keir Starmer has got the foresight to proactively manage any fallout with Trump. SMCI is up 1.16% in pre-market. Broadcom is up 0.15 after giving up some value last week. It's trying to stabilize out here. Palantir is down 0.41%. They have got all the data from Social Security, and the Supreme Court has given a go-ahead for Doge to get data. Now, all of these, I think, are wrong decisions. With the ability of Palantir to make sense of discrete data, that's going to give extreme power to Trump. And if Peter Thiel was to team up with Trump, that gives him a lot of power. So Palantir could be the next Tesla with stocks gaining significantly. So that's what I'm thinking. And the stock also looks at the point of time very weak, but even though technicals are saying it's weak, if Trump was to, take total domination of US, he could use Palantir and the data that he has collected to make strategic moves that will give him the power. And I suspect that's what will happen if he was smart. SMH, semiconductor ETF, is up 0.61%. We have a target for it at 281.01. And the only caveat is that the geopolitical situation, the economic situation, and the tariff-related situation in the US is not at all looking good. But if NVIDIA and others start building base outside where there is lesser regulation and there's a rule of law and everything, I think there would be more value out here. So SMH is reflecting that. Tempus AI is up 1.74%, and it's doing pretty good overall. Considering the current scenario, it's been consolidating. I would consider this to be more of a bull flag situation if we were to expand it, and I think it has to break out on the upside. That's what I would say. This is my flag, and this is the pattern. We'll see what happens with that. Sentiment is bullish, but people are starting to wonder whether we're going to have continued bullish sentiment, and that should get cleared out in a few days. That's what I'm thinking. FNGB is still up. I've spent a lot of money on FNGD. I've been dollar cost averaging at lower price. I'm in double digits, but when the price goes down to somewhere around $7, I might buy another bunch. The overall sentiment is still bearish. I think the whole market is extended like an elastic. I want to look at genomics because we are a genomic channel, and now we have some people who look at genomics coming in. So I want to give them some feedback of what's happening out here. Prime went gangbusters yesterday, but it was stopped by this diagonal line of resistance. I think it's going to break through that today, and that line is at 1.82 today. And pre-market, we are at 1.82 exactly, up 7.69%. And I don't see any new news except that Prime Medicine is to participate in upcoming investor conferences. That's all there in the news. So, yeah, that's what I'm thinking. Just hold on for a second while I try to look at the other stocks out here. Just 1 second. Intelia is up 1.73%, and it's above this minor line of support, and it's trying to get above the 21-day exponential, which is sitting at 8.16. It's at 8.23 this morning. Once the market opens and we close above the 21-day exponential, I would be really glad, because it will set up a new base on which we can build up, and the resistance continues to be 8.96. Then we have Caribou Biosciences up 3.17%, and it's converted this resistance at 1.26 into a support in early market trades, in the pre-morning trades. 1.30 is the rate at which it's trading right now in pre-market session. Beam Therapeutics is also up 1.10%. In pre-market trades, it's going to challenge the resistance at 19.12%. And we have Altimmune, which is also up 2.31%. And it's still got this resistance at 5.81. Right now it's at 5.75. I think it has the potential to break through this. If the overall market stays bullish, I think that's going to make genomics also go up. And this is a golden opportunity for genomic stockholders, in my opinion, to start taking a little bit of profits and putting in some calls to protect on the downside. Look at Verve. Anyone who has been holding Verve is going to make a lot of money, especially if you had bought it somewhere around 2.95, or even if you had bought it somewhere around 5.02. You are in profit, and you are thinking, what do I do right now? Even if you had bought it at 5.83. This is the opportunity, I think, to take some profits and also to sell some calls, covered calls or something like that. My personal opinion, of course, not financial advice, because if you look at sentiment, it is bullish. MACD is bullish, and we are already on overbought situation out here. A little bit of consolidation and then cooling off is in order, in my opinion. And that's what I would say for Verve. Editas is also up 3.14%. And we have converted this minor line of resistance into a line of support. And we have a line of resistance at 2.06. Right now we are at 1.97. So let us see if we close above this minor line of support today and validate it. Then we are all set to break above this 2.07 and make that into a support. We have Illumina up 0.17%. Again, this is a money-making company which has got products which are top of the line in its class. I have a lot of hopes for Illumina. I'm just waiting for it to pick up. It's on a minor line of support, which is a bullish line. And it's got a slow gradient, which is very good. It's sustainable. So I'm hoping that we are going to continue traveling on this and break above this line of supply. which is going to be a huge resistance. So I'm just going to pull this out here and leave it out here. So I think somewhere around 24th of July, we'll get into this diagonal line of support moving upwards, and it will help us to break through this and absorb all the supply that is out here. CRISPR Therapeutics is up 2.72%. What a wonderful gain for CRISPR. And anyone who had bought somewhere around 31.25, you're really laughing to the bank right now. You're making a lot of money out here. The minor line of resistance, which was at 42.93, has been breached. We are right now at 43 in pre-market trading. And I'm hoping that we close above this minor line of resistance, which has now become support, so that we can validate that as a support and build a base from there and move upwards. It's going to be a long journey because the overall environment is not conducive because of the tariffs and other issues, and also the flux in FDA. But everything is looking good for CRISPR right now. Allogene is down 1.41%. Grail is up 1.46%. PACB is down 0.88%. Still, it has got support at 1.09. Right now, it's at 1.13. Then we go to ARCG. ARCG is up 1.29%, reflecting a good amount of strength in the genomic sector, and it continues to have support at 22.96. We have Vertex, which is down 0.69%. Ginkgo Bioworks is up 2.77%. It's getting some favorable look from analysts. Some analysts are seeing upside, but risks remain and other important updates. So I am not going to click on this one because it goes nowhere. Unicure is up around 1.62% in pre-market trade. And this means we have converted our support at 16.86, resistance at 16.86 into support. So this is a good thing. If we close above that today, then we'll confirm this support, build a base, and go further ahead. Unicure is doing very well. And we have IMTX up 2.51%. Precision is up big time. Pre-market, there are no trades right now. It has broken out of this wedge, which we had created, and it said we had to break out of this. It broke out in big fashion. So it's going to confirm about this today and go further, because we are going to arrive closer to the FDA approving the therapies that they have. There's a BLA that has been submitted, and the PDUFA date is in August. That's when the approval comes in. I'm watching this stock for future. I wish I had bought it somewhere out here, but before I could buy, it already broke out. I was extremely cautious. It's going to be a speculative play, assuming that FDA is going to approve the therapy, and we would see a pop, and I would sell at the pop and then come out. That's my plan. And I also bought a little bit of Lilly, which is doing very well. Pre-market, it's up 0.13%. So I bought it somewhere around 719.90 on the Canadian side, and I'm waiting for an opportunity to sell it. So that's the situation that we are in, my friends. And also one of my other holdings is Berkshire Hathaway. It happens to be in the Canadian side. So I'm holding on to it. I have got around 600 units on the Canadian side. I'm dollar cost averaging into it. I've already taken huge profits on Berkshire by selling it as the stock was going up. And now I have started the buying cycle, buying a little bit with every dollar that falls. And I'm going to accumulate on that. Again, when it goes up, I would sell it out. So that's my plan for the day. And I would like to hear from you guys what you are thinking. And I would like to hear from you guys. Let us see. Inf is saying the cash position on some of this genomics doesn't look good, and the high bond yields higher for longer ain't good sign for small companies. Absolutely, I agree. That's the problem right now. The technical is showing positive. The market is very upbeat. Whereas when I look at the fundamentals out there, the inners of the economy, macroeconomic signals, everything is looking really bad. So in this circumstance, I don't know how this is going to work out. So that is the caution I mentioned always in the background. So friends, that's all I got for you guys today, and I'll catch up with you again tomorrow. Got to go and have my breakfast and come here for some trading. Some profits might be to be had, and some shorts might be to be made. So I'll look at that. And Inf, thanks for joining me, and I'll catch up with you again